Hey everyone, in this video I'm going to analyze BigBear.ai stock. We'll look at its business profile, annual performance, financials, valuation, business outlook, and a few other things. I'll share my conclusions at the end of the video. Let's get started. BigBear.ai business encompasses AI orchestration and sensor fusion, digital identity management, computer vision, cybersecurity, predictive intelligence, modeling and simulation, enterprise automation and professional services. These enterprise automation and professional services include cloud engineering and enterprise IT, cyber operations and cybersecurity, data analytics and visualization, systems engineering, strategy, program planning, and agile services. Basically, BigBear.ai sells AI-powered decision intelligence solutions and professional services that transform complex data into actionable insights for government and commercial clients. Next, we'll look at the influential figures within the executive leadership at BigBear.ai. First is Kevin McAleenan, Chief Executive Officer. He is a government official who served as the acting United States Secretary of Homeland Security from April to November 2019. Then there's Carl Napolitano, Chief Operating Officer. His experience leading the integration of major acquisitions like Pangiam is crucial for BigBear.ai growth and synergy. Next is Peter Canedo, Chairman of the Board. His experience as CEO of Redwire and Polaris Alpha, coupled with his defense and tech background, makes him highly influential in shaping BigBear.ai vision. They are responsible for the performance of BigBear.ai. Here are the top 10 shareholders of BigBear.ai stock. 25.43%, TAE Industrial Partners LP, 3.03%, BlackRock Advisors LLC, 2.51%, Vanguard Fiduciary Trust Company, 1.48%, UBS Financial Services Inc., 1.40%, State Street Corporation, 1.15%, Millennium Management LLC, 0.97%, Amanda Long, 0.93%, Goldman Sachs Asset Management LP, 0.89%, Geode Capital Management LLC, 0.89%, BNP Paribas Arbitrage SA. There is no single party that controls BigBear.ai. These are the issues BigBear.ai has experienced: accounting errors and financial statement restatement. The primary issue disclosed relates to the improper accounting treatment of the $200 million 2026 convertible notes that were issued during their SPAC merger in 2021. The company admitted to a material weakness in their internal controls regarding accounting policies for non-routine, unusual, or complex transactions. Securities class action lawsuit. As a consequence of these accounting issues, several law firms have filed securities class action lawsuits against BigBear.ai and its senior executives. These lawsuits allege that the company made false and/or misleading statements and/or failed to disclose material information to investors between March 2022 and March 2025. Now, let's look at their annual performance. From 2021 to 2024, their performance has been quite poor. They incurred losses every year to the point where they had to request more capital from investors. Their equity has continuously decreased each year, which is detrimental to investors. This is because when investors buy shares, they are essentially buying equity. Equity in Q1 2025 turned positive because they requested additional capital through a corporate action of issuing new shares, which also diluted the stock price in the market. This is also detrimental to existing investors if they do not buy more. Revenue growth has been minimal each year. As of now, they are still operating at a loss. Next, we will compare their total current assets with total current liabilities to see if their total current assets can cover their total short-term debts due within 1 year. Here it shows that their total current assets are sufficient to cover their total short-term debts due within 1 year. Especially in terms of cash, their cash balance of $107 million can cover all their 1-year debts totaling $89 million. However, if they continue to operate at a loss, how will they generate more cash to pay off debts in subsequent years? Next, we will look at the comparison between total liabilities and total equity. Total liabilities represent capital sourced from debt. Meanwhile, total equity represents capital sourced from investors and accumulated net profit. If total liabilities are greater, then more of the company's profits will go towards paying off debt, which is less favorable for investors. Conversely, if equity is greater, then more of the company's generated profits will be distributed to investors. If we look at this data, total liabilities at $198 million are greater than total equity at $197 million. This is not attractive to investors. The ideal minimum is 40% liabilities and 60% equity. Now we move to the income statement section. Revenue slightly increased by 4.9% from $33 million to $34 million. Routine operational expenses, excluding transaction costs and goodwill impairment, rose by 50.8%. Consequently, the company's loss increased by 44.8% from $42 million to $61 million, if goodwill impairment is excluded. Overall, their performance is quite poor due to the increase in operational expenses. If BigBear.ai wants to generate a profit, they must increase their revenue tenfold to achieve a positive net income. Here's an illustration. If revenue increases tenfold, they would generate a net income of $4.2 million. Are they capable of increasing revenue tenfold? Another solution is for them to reduce operational expenses. In the operational cash flow section, it is still negative $6.6 million. If this trend continues, cash will deplete, and BigBear.ai will have to request more funds from investors again. It's time to look at the valuation of BigBear.ai stock to determine if its price of $6.79 is expensive or not. The price-to-book value ratio is 9.92 times. The price-to-earnings ratio is minus 8.78 times. There are no dividends, as the company is still incurring losses. At a price of $6.79, with a price-to-book ratio of up to 9 times, and the company still in a loss-making position, its valuation is considered overpriced. A reasonable valuation typically has a price-to-book value ratio around 2 times for a company with average performance. However, if a company is losing money, it is usually below 1 time. Since the company is still unprofitable, its return on equity is negative. Now, let's move on to the business outlook, short-term outlook. BigBear.ai has set a revenue target of $160 million for the fiscal year 2025, indicating growth from $158.2 million in 2024. Still uncertain. Long-term outlook. BigBear.ai won a 5-year, $165 million production contract with the U.S. Army for the Global Force Information Management Objective Environment on October 14, 2024. To become profitable, BigBear.ai revenue needs to tenfold to cover operating costs and other costs. That seems like a long way off without a significant breakthrough. Here's the latest news regarding BigBear.ai. BigBear.ai sees biometric software deployed at international airports. BigBear.ai partners with EasyLease, Vigilix Technology Investment for digital transformation in UAE. Finally, we come to the conclusion. BigBear.ai continues to incur losses, and these losses are increasing at a rate exceeding their revenue growth. To remain operational, they raise funds by issuing new shares, which dilutes the stock price in the market and harms existing investors who do not purchase additional shares. BBAI stock is not suitable for long-term investors due to its very high risk. They have not yet found a way to significantly increase revenue, nor have they found a way to reduce operational costs. However, BBAI stock is suitable for speculation for short-term traders, leveraging positive news. If you'd like to request a stock analysis, visit this link, or you can also click the link in the description. Type the stock name you want analyzed and donate any amount.